Okay. This is what we have. I just wanna discuss something today. Okay. Let me set out everything here so that we get started and we are not being disturbed. Let me start sharing this thing. I want to share something before this. Yeah. Let me say share this. Okay. I want to talk about something which we call base in the market. We'll talk about bases in the market. So what is a base? A base is this kind of candle. So as you can see here, we get to say we count the candles here. One on the green candle. These are bullish candle, the green one. We have two, one and two this side. So we have this candle that is bearish. It's one candle that is bearish, and then we have two candles upwards that are bullish, and then we have two candles below this bearish candle that are also bullish. So we get to say something like that is what we call a base. Right. Wait a minute. Let me set up something. Okay. So when price come here, we expect to see price going up because we have our base here. So let's take we have price going up right now, and we get to see our base here, and then price come back and pull back. So what is a base? A base we can get to say maybe it's this. If we can look at these candles 1 2 1 2, our main focus is these two candles. Okay, so if you can look here, these two candles, they are the same, and these two candles are the same. So this one is just a different candle. It's in the middle of bullish candles. So you can say it's just like an outline, this one. So we get to call that candle a base. So this one, it's gonna be in a, when price come back here, we're gonna expect price to be bullish. We're gonna expect to buy. So we get to see the same thing here. When price is bearish going down, get to see one candle that says we are going up, and then you see candles continue to drop. So that's your base. You mark that kind of a candle, and then you get to see price coming in and price get to drop. We put our stop loss here 10 pips below this wick of the candle. So you put it 10 pips. So then now there is a scenario that we get to have sometimes. We find that our base candle is too big. You find that your base candle is too big. When you get to see that the base candle is too big, price is most likely not to just touch this and drop. It's most likely to go in here, maybe 50% of the thing. So what you can do, you can pull your Fibonacci and get 50% of that candle, the base. Let's take this is the candle. Okay, the candle is too big here. and then you can pull your fee from here, and then you get 50% of that thing. So it's most likely to cover that 50%, and you get to see price go down. Or if you are skeptical about the base being respected, what you can do, you can just highlight the base and wait for price to actually come and spike this level, and then you get to see price closing below this level, like the shade of that candle, I mean the body of that candle that will get in here, it needs to close outside this zone of the base. So if it closes outside the zone of the base, it's some sort of a confirmation. But there are times where it will not close outside, but most of the time it will close outside. That's what happens. So you get to go in with confidence and you see the market dropping. Well, that's what happens. And most of the time I get to have, when I was trading retail concept, one of the most successful factor when it comes to trading base, it's when you are having a previous low or high that was being violated. You see here the market just broke this high here. So we have a break in market structure. So we see a base at the same time. So this level, we know that the market, has a tendency to respect previously disrespected structure. So it's sort of like validates your base when it's like this. Price is most likely to come here and you get to see price going up. Okay, so but then let's go on the chart and I get to show you something that we can build our premises and work with it. So let me see. It's the same thing that I was trying to actually show you here. It's the same thing that I was trying to show you here. In a bearish, for a sell setup, this is what you're gonna be having. For a buy setup, this is what you're gonna be having. Okay. So remember, it's your duty to go back and back test everything. Here, I'm just gonna show you what I need to show you on my chart as we gonna proceed and go to my chart. So it's actually the same thing, more illustrations so that you get this thing. So okay, let's just go to our main thing on our, let me change the screen sharing and show you something that we have here. Okay, so we get to see that we have here something, we have a green candle here, which is gonna be a base. So we calculate from this side, we have 1, 2 candles that are bearish, we have 1, 2 candles that are bearish. So we get to see this now qualifies to be our base. Okay, so we get to draw our line like this, indicate our base. So this is our base that we indicate. Let me try to make the line straight. Okay, let me do this. You know, it's something that is easy. The more you back test everything that we have covered, and remember, everything that I'm covering here, it should be used as together. It lines up with everything. You should be using it together. So we get to see that, as I've said, we get to see that the candle here, this candle, it's kind of like it's very long. So we can just mark the low, but you know we're gonna take 50% of the candle, or we can even take the body of the candle to consider as our main setup. Okay, let me do like this. So put it like this. Okay, yeah, now it's straight. So now we get to have our zone here. We get to have our zone. We have our zone here, so we can pull 50% of, put our feet like this. Though it's gonna be difficult because it's very small for you to actually see that 50%. So you can put it like this, and you get to see that we have our equilibrium here. You mark like this, okay? So price is most likely to come for that 50%. And guess what happens? We get to see price coming for that 50% and spike the level, and then it gets to close below. So you get to see that, oh, price is respected this thing. So we get to see price dropping here. You took that trade, you make money. And now before we even get to see, this is our zone that we are targeting. So we get to see that our price actually tried here to come here and touch this level, but somehow we get to see that price actually failed. So we get to call this our FTR, which is failure to retest. This is our FTR in capital so that you can be able to see it. So we get to see that this is our FTR. And now when price is coming back, failure to retest this, so it sort of validates that whatever that we have here, it's gonna work, okay? So when we see a failure swing to our supply, or whatever you can call it, to our base in this case, or our supply, it's the same thing. It sort of validates that the market, when it comes next time, it's gonna respect that area, okay? So what we are expecting here to happen when we see our FTR, we get to see that price is gonna clean up this thing. So we get to see that all the stop loss that are resting here, they're gonna be taken out, okay? So if you get to look at this scenario, we get to hear people saying this was a fake out. So price actually just fake out. So we get to see people saying, no, this is a fake out that we have, and we get to see price dropping. So in a scenario where we get to expect a fake out, I think that's the most high probability trading setup that we can have. Okay, let me clarify on fake out. Let me clarify on fake out on the whiteboard. So let's get to talk. I have a lot of, I think I have an hour with you. I think I have full 30 minutes before I get to have a Zoom session. So I think we can finish up everything. So now, let me draw something. Let's say we get to see price going like this. We see price going like this. And we get to see price dropping, okay? And we get to maybe, let me just, okay, for this case, I'm just gonna put a straight line, okay? So we get to say we have it's either our supply zone or our FTR. But I would love that every time when you're looking at your things, they need to line up together. You need to be having a supply at the same place with your FTR. So, you know, when it comes to trading, we are looking for confluence in the market, okay? So that we increase our probability of that setup being a success. So then now let's get to say we see price doing it something like this. And guys, what you need to keep in mind, I always say, when price is approaching a significant level, we're gonna see it with compression, okay? When price is approaching a significant level, we're gonna see it with compression. So you get to see that price now get to do something like this. And then you get to see price going up. It has a tendency to do this, trust me, okay? And then you get to see price doing like this. So we're gonna mark this equal highs here, and price is gonna come and collect the liquidity that is resting on this equal highs. So what we get to say now, let me also put something like this so that we can, let's say we have our supply like this here also, and we also have our base somewhere here, and this is our supply. So now this area here, you see this area here, this gap here, we get to call it what we call a fake out zone, okay? It's a fake out zone. So what we are trying to say, the market is gonna do a fake out. So we're gonna get to see the market now collecting everything that is here, collecting the liquidity that is resting on these equal highs, and we get to see the market getting to our supply and demand zone, or getting to our base. Okay, so then we get to see the market dropping and collecting all the stops that are resting here. Okay, so that's what we get to have in the market. And this is what we call what FTR. Sometimes you can just indicate it like I usually say R1 and R2 if they are two, but it's just FTR or FTR1 or FTR2. It just doesn't matter, whatever you want to call it. So price is gonna come now to your supply, and then you get to see price dropping. Or you have a base, it's gonna come to your base, and then you get to see price dropping. So that's what you need to be expecting on the market. So now let's go back to what we have in our chart. I think it's, yeah, let's go back. Let me change this screen. Okay, so this is the scenario that we get to see here. Prices collected all these are equal highs that we have here. So you see, it sort of give you an idea, it sort of give you an awareness of what price is trying to do here, because we get to see that we have a shoot here which has created price imbalance. And by the way, if you don't understand when I'm talking about price imbalance, please watch all the videos. And we get to see that the market has been moving with compression. So when we see compression in the market, it sort of indicates to us that price is going to a significant level. Okay, so we get to see that the market is compressing, moving up. So we're gonna look for a point of reference that we're gonna be using on this high. So we get to have our point of reference, which is our base here, and then we say, oh, this is where price is going. So we target price, and then we get to see price dropping. Okay, so that's what we have, guys. That's what we have. Simple stuff like that. Simple stuff like that. So let me look for another example that we can use. And if you also look at here, we have the same thing here. We have, let me just take this up. We have two candles, two candles that are bearish. So we get to have our base here, one bullish candle in the middle. So this is our base. You get to see what price did. FTR first thing, we get to have our FTR validating our setup here, and then price came, and then price is dropping. Okay, so you need to backtest this thing. You need to backtest this thing. I'm not backtesting anything for you. You just need to backtest for yourself so that you can be able to see what I actually see. So you get to see that the same thing here. We have our FTR here, and we get to see, we have our base here. Let me just remove this and just put lines so that it can be clear for you guys to see. So this is what we have. Is what we have. Yeah. Okay. So we get to see our FTR failure to retest this. That's FTR, and then price come back later, and then we get to see price shooting down. Okay. So that's what you should be looking for in the market. Trading forex, it's very easy. You don't even need to be in a mentorship class. You can make money with all the content that I've been sharing without you even knowing what is institutional trading. So we get to see the same thing happening here, and price quickly move away. So price has been doing this thing for a long time. This is what we have in the market. So we get to see the same thing here. We have our base here. We get to see the same thing. We have our base price come back and retest it and quickly move away. So price has been doing the same thing all over and all over again. There is nothing that is difficult. And if you just look here, we get to see that we have a base. That's why price has been struggling actually. Price has been struggling to move out of this and take out this because of this base that we have here. Price actually spiked this level and closed below, and now we get to see price dropping. So I don't know if you guys understand this thing, and we get to see here that we have a base here and price actually failed to come here. So this is our FTR. And next time when price is coming to that level, we expect price to react somehow. So this is something that can help you in making money. So we expect actually when price gets here, where is that thing that I did? Oh, let me just click this. So I expect price somehow to get here, and then we see price dropping. Then we're gonna see a drop. Okay. So that's what we are expecting. Those are bases in the market. Those are bases in the market. There is nothing difficult about it. Just make money, backtest everything, go back to everything. Okay, I see this this guy is called Basha. He's saying hi bro, good luck, thanks bruh. I see. Okay, so there is also he's also saying what if base candle is inside the bar? How can we use it? Can you please elaborate on your question? What do you mean when you say it's inside the bar? What do you mean when you say it's inside the bar? Are you talking about pin bars, candles, and stuff like that? So clarify, said before I leave, so that I get to address your question. Okay. Okay. Let's wait for this guy to actually respond on his question so that we get to answer him, and then we can come out. So that's the thing, guys. I think trading forex, personally speaking, for me, it's very easy. It's all about how we get to approach the market. Our approach is the most significant thing that we have in the market. How you approach the market, how you see the market is gonna define your success. And we need to get out of this tendency of thinking that price is being moved by trend lines and stuff like that. It doesn't happen like that, okay? There is no line that you can draw that can move the market. We get to see here, we have the same thing. Look here, we get to see that we have an FTR failure to retest this level, and we get to see price coming and going up. And then the next time price come back and be failing to break this level here, it seems to be a strong area of resistance. So we get to see price going up. So let me read the question. Small bull candle which is inside a bearish mother candle in downtrend. So your question, you are using too much English. It's difficult. I don't get what you are trying to say. I don't get what you are trying to say. So that's the thing, guys. I can show you a lot of examples in the market, okay? And this is the thing. You see this here. This is price imbalance, okay? This is price imbalance. Price is gonna come and balance this thing, and then we get to see price dropping. So we have something here that we can use as our point of reference. So this is what we have. We have our base here. So we get to know that our price has two areas, okay? And then we get to see the market dropping. So this is what we have in the market. Don't even, you know, I don't know why people are not making money. I don't understand at all. But let me continue and keep quiet. So this is the thing that we get to have. I think I have, and I saw something that is so interesting. Let me look for it. I think it's on weekly here. Is it weekly or month? I think it's on monthly. Okay, let's look at this thing here. If I can zoom, I get to see that we have 1, 2 candles, and then there is one candle here, and this one is simply what we call supply and demand zone. Okay, so you're gonna mark this area like this from this candle, and then it comes here. You get to see price going up, and this is something that I've covered on our videos. Just go back and watch everything, and you're gonna make money. And I understand that not everyone is able to afford the courses on institutional trading. And trust me, that's the reason why we have these free lessons that we have. That's why we have these free lessons that we have, because we understand that not everyone can afford actually to get our course. So just get everything that I'm posting on YouTube. Use it wise. You're gonna make money. There is no way that you're not gonna make money. There is no way that you're not gonna make money. Then you can join in later. Or it's up to you if you feel like you're comfortable with everything. Just make money. No strings attached. So this is what we have. This is what they have. Let me check on the comment section before let me check the comment. Okay, he's saying it's okay, fine. Please continue. I'm listening. Oh, okay. So that's what we have. That's what we have. If there is anything that you think we should discuss next time, you can make a suggestion and I'll get to talk about it. Or I will even get to tell you that this is something that you need to avoid, because there are certain trading concepts that we need to avoid in the market simply because they don't work. If something is 50-50, there is a chance that you can lose. Most of the time it's 50-50. That's not trading. At least 60% winning success rate, 70% winning success rate. That's when we can get to talk. So have a nice trading weeks, a nice trading week ahead, guys. Let me also look at this and see if I can not find something that I can talk about. Okay, let's leave it for the night. Okay. Good night, guys. Good night. This is me signing